Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 30th of March 2017, presented by myself, Phil Carr. So today during the session, we will be covering live market analysis. We will be going through a watch list of trading opportunities. We'll go through our forecast of where we expect gold, silver, and also oil to be heading next. We'll be answering questions and of course providing live support. Any questions or comments, feel free to put those into the chat as we continue with today's analysis. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it's a pleasure to be here on FX Street too. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldensilverclub.com. Okay, excellent. So before we go into the chart, I will just quickly give you a view of the markets at the moment, where we are sat. We are essentially today, 30th of March. Tomorrow is going to be the last day of this month. And as such, it puts us in a good position to review the performance of the markets over the month of March. Also note that tomorrow is also going to be the final trading day of the quarter as well. So a lot of traders are going to be paying a lot of attention to the closes tomorrow, the close of the week, the close of the month, and also the close of the quarter as we head into next quarter. So it's quite important to see how a number of markets do finish up this quarter and the month of March. So therefore, we want to look at the performance of markets over this month. Quite important to first understand where we are sat with regard to the overall month of March being overall bearish for quite a lot of markets. You can see more red than green here. Some of the best performers, and this is mainly due to a snapback in price after a move lower, has been in natural gas and cocoa. Previously, natural gas and cocoa have been the worst performers over most of 2017, but over the month of March, they've managed to stage recoveries. Natural gas is now up over 12%. Month to date, cocoa is up over 8%. So there's been reasonable rallies to the upside. Markets which are broken down quite considerably over this month include sugar, which is down now over 12%. In fact, sugar has broken down again today. We've actually been shorting sugar over the course of this week, and we've just hit our profit target on that trade. Oil as well has been relatively weak over this month after it broke down from its consolidation pattern, where it broke all the way down, back down to $47 per barrel for WTI crude oil. Brent has also dropped over 7% over the month of March. So with that, we'll move over to the charts, and of course, any questions, comments, feel free to put those into the chat. There's several different correlations markets I want to have a look at. First of all, we'll move it over first off to gold, because gold is looking quite interesting right now. It's been consolidating most of the week. Yesterday was a bit of a non-event for gold with Article 50. We didn't really see too much movement. What you'll need to look at in gold right now is the pennant formation which has developed, this consolidation which you can see highlighted in blue here, where we've essentially just been chopping sideways throughout most of this week. However, on Monday, we did see gold break and surge up to the 200-day moving average, which is currently sitting around 1263 on the chart. Gold so far has not managed to break above the February highs, where we also tested the 200-day moving average. We've also got this overhead trend channel, which you can go and draw all the way back to the Brexit highs at July, mid-July here, where we saw this initial big breakout on Brexit, retraced and then came all the way up and broke out to the highest level months when we saw that level get breached in July. Where we're sat at the moment, we've had a number of bounces off this resistance channel. You can actually draw another channel depending on whether you're using the closes or the spike highs on this market, and you'll see where we're sat. We're sat with a consolidation around that previous level of resistance, and the question really now is gold going to be able to stage any additional follow through? Can it break above to break out to 3-month highs? Can it breach the 2017 highs so far, put in at the end of February? Or is this it? Are we going to see gold roll over now? Are we going to see a breakdown as we go into April and May, which traditionally is not a very strong month for gold? If you go back to seasonality charts over the last 5 years, normally April is not a great month for gold. You would expect either a consolidation or a breakdown in price. I'm not ruling out the potential for another spike high here between now and the end of the week, but that would really be off the back of the dollar breaking down, and that's definitely not what we're seeing at the moment. The dollar, in fact, you can see here at the moment, is staging a recovery. The last 3 days, it has rallied back. It actually filled the gap where it gapped down on the Monday open, came very close to the 200-day moving average, lower end of the trend channel. We gapped down, formed a hammer, filled the gap over the course of Tuesday, follow through on Wednesday, and we're building up some momentum here. So you can see this V-shaped reversal pattern, and it looks like really we've got the potential for a rally in the US dollar here. I'd certainly be short-term on the side of the bulls here for the US dollar, looking for a short-term retest of the 50 MA and the 21-day moving average, providing this follows through. So it does look optimistic for the US dollar at the moment, which I would expect to therefore put some pressure on gold. At the moment, if we have a look also at the weekly chart for the US dollar, and of course it's very important to see how the US dollar closes out the week, because if there had been a close, or if there is a close below 99 level by the end of tomorrow, so the end of the month and the end of the week, that would spell the potential for a further correction on the US dollar. But this at the moment looks like a bear trap. We broke support. You saw initially traders getting obviously stopped out of their longs, and some traders entering into sell short positions on a break of 99, but then we filled the gap, and this is almost a bullish engulfing candle. If it gets much higher on the weekly chart, that is essentially a buy signal. You've clipped below support, not closed below it, and the potential to then rally and retrace higher. It's not necessarily the start of a huge rally here in the US dollar. It could just be short-term move back towards the upper end of the trend channel, so put short-term pressure on a number of commodities priced against that, such as platinum, gold, and silver, and then the US dollar might well retrace and go for its second leg lower. But at the moment, momentum is on the side of the dollar bulls here, and I would expect that potentially to carry through today as well, and a further surge. You've got a nice V-shaped reversal pattern. The neckline has already been broken, so I would look for a continuation pattern here on the US dollar, which would likely put some pressure on the short term on gold here. I'll just quickly show you that on a different color scheme to show you the neckline. There we go. So essentially we're breaking through the neckline at the moment for the US dollar, and yeah, just anticipating further strength on this market. So what trades could we look at as a result? Well, certainly the US dollar looks like it wants to break out, so it could be a long buying opportunity on the US dollar short term, take it up to resistance around the monthly pivot, around the 100.70 zone, which marries up with the 50 MA, the 21-day moving average. It's approximately 100.60 up to 100.70 on the US dollar if you trade the US dollar directly, or you might be trading it via another Forex major. Now, if we go over and have a look again at gold here, if gold breaks below and closes below this pennant today, I actually quite fancy this for a sell short. The reason being is that it's so straightforward in terms of your stop just goes above here. The 200-day moving average goes above the swing high, so 1262, and then if you wanted to give it a little bit more breathing space, you pop it above 1263, so stop loss to 1264. Instant execution really on a trade on a close below the pennant here and a close below the last 3 or 4 days worth of lows, ideally closing below 1242. That would then open the door up for a corrective move lower. How far it would get lower will be determined by this. Oh, there we go. All trends just gone red there. So that's actually already starting to give a bearish signal. You can see that's just come real time. It's given a sell. So gold looks like it's going to break down. I would suggest that pennant that's broken, we've taken out the last couple of days of inside candles, taking out support. Gold has the potential to follow through now. It's actually pretty good risk to reward basis at this point, although it's a bit aggressive getting in right now until you've got a daily close below support here. But ultimately, I can imagine a lot of traders will execute sell orders around this level because it's such a good risk to reward for a potential larger correction if we see this follow through, and if gold cannot sustain any additional breakouts, because so far it is a lower high. It hasn't managed to get above this previous high that we put in at the end of February. If it's a lower high, it will start to break down, and there's a good potential sell short opportunity. In fact, it's really starting to move now as we're coming into the US session, so I'll be looking at that as well very shortly. Also, if we go over to, we'll just move over as well to have a look at oil. Oil right now, it's certainly staged a bit of a recovery over the last couple of days here. You've got a box right now which you can draw on oil between 50-20 zone, which happens to be the monthly pivot as well. Support at 47. It's moving between 47 to 50 within a $3 range at the moment. Today is decision time because oil has come up, retraced and rallied back towards a 21-day moving average. The big question here is whether oil can sustain this breakout at the moment, whether it's going to be able to follow through, break and close above this level. It's at $50 per barrel right now. Of course, if it does break above approximately the 50-20 zone, it opens up the door. I would suggest taking it up to at least 51 US dollars per barrel. So it could be another dollar move. At the moment, it's been hesitant. It was breaking down earlier on this morning. It's rallied back up again today. It's got a box formation right now. I would look for a potential breakout if it breaks above the 50-20 zone, taking out the monthly pivot, rallying back towards overhead resistance at the 51-30 zone in the short term. Whether that can sustain a breakout, I would look for potential resistance here around the 50-day moving average, 100 MA, hit resistance and potentially see sellers come back in. Selling into strength might be something that we see, but not selling right now, potentially selling into an overbought condition. So it's starting to get overbought. You can see at the bottom here, I've got oversold, overbought condition. We're at the most overbought, essentially, oil has been on a short-term basis since December. So it's at a bit of a decision time now as we go into the US session this afternoon. I'm also keeping an eye on the S&P 500 right now. This overall price structure, I'm looking to see whether the S&P can create a bull flag formation here. So, well, it has created a bull flag formation, but I'm looking for confirmation because this looks quite interesting right now. Resistance also at the 21-day moving average. I'll keep it very straightforward for the S&P. There's a lot we could go into, but I'll keep it straightforward in terms of what I'm looking at right now. I perceive this as the potential bull flag formation right now, and if we can break above resistance, which also marries up with the 21-day moving average, so if I just show you that on the chart, the 21 MA is represented in white. We have a look at that, and let's just make that a little bit thicker for you. Okay, so we've got the 21-day moving average meeting at the moment. You see here, meeting the upper end of this trend channel. A breakout above that level does create additional follow through, particularly if we also see momentum continue to the upside for oil. Essentially, I'm watching oil. If oil breaks out to the upside, I would expect some follow through for the S&P 500 here as well. You have to remember that the high that was put in here on the S&P 500 also correlated to oil breaking down afterwards. So when oil broke finally below its underlying key level of support and then broke down 9%, this was the start of the correction on the S&P 500. Now, it's not always the case that these two markets will move in lockstep, but they are more recently. We can see certainly confluence between oil and also the stock markets at the moment, particularly as both have formed a recovery over the last 4 days. Both are finding resistance at the 21-day moving average today. In fact, oil was already broken above that level. I do note as well that if you just track the 50 MA here as well, which a lot of traders do look at for the S&P, you can see where we came back down to 50-day moving average, broke below it, and then found support, broke and closed back above it again. And at the moment, we're holding around this level at the moment. That by itself, that rejection candle provides some traders with a setup. And I would also argue at the moment with the S&P 500 that you've got the beginning of a V-shaped reversal pattern base, which the neckline is also sitting around 2365. And I would look at that for a potential follow through. Here it is. You've got quite a few levels of confluence for a follow through on a break and close above the 21-day moving average today. Then the bull flag gets confirmed as well. And then we could be up and running with the next rally here on the S&P and essentially look for taking out the all-time highs yet again. So there's just something to bear in mind that we're looking at in terms of some of the correlations and some of the setups which are developing. We're only really just getting started into the US session today, so the S&P should start to wake up soon, and we should get some confirmation as to whether this is going to rally or break down or what the situation is going to be on this market as we go into this afternoon. Also, moving over to silver. Silver at the moment, it did manage to get some good follow through. We did mention this last week as well, where silver typically catches fire if it breaks and closes above the 50-day moving average, from an oversold condition, not if it's overbought, from an oversold condition. This was the case back in January 2016, April 2016, and also June of 2016. And most notably, when you see this crossover, where you see essentially a break and close above both the 21 MA and the 50 MA, so you hook below and you hook back up again above those moving averages. When you get a close above both, close above both, excuse me, in a very short duration of time, this often leads to all these towards these big breakout moves of in excess of 5%. And certainly we got that last week. So we hooked below the 50 MA and 21 MA. We closed above on Friday, followed through on Monday, Tuesday, Wednesday. We're sitting around the 200-day moving average at the moment, just finding a bit of support. You've also got the potential for a breakout and a surge higher, breaking above the swing high here at the end of February. But at the moment, the US dollar strength could put a halt to this rally. Really, if it cannot manage to get any additional momentum above, we've got a higher low, a lower high, and therefore if we just break and crack back below the 200-day moving average, silver possibly won't be able to maintain this momentum, and it will correct, and potentially we'll have a new channel develop, which will be another channel here, which we could see a potential retest of the lower end of that zone. I mean, that is putting quite a lot out there in terms of potential forecasting there. But if we cannot crack above this resistance, it's essentially a lower high on the chart. I mean, I'm sure you can see that. And if the S&P, excuse me, if silver cannot continue the momentum higher and the US dollar keeps on rallying from where it is at the moment, you can see it's starting to ramp up already right now. That could put some pressure on certainly gold and silver. I'd look also for a shorting opportunity on gold. We'll just move back over to gold here. Yeah, gold is starting to really pick up momentum now. Already my indicators have fired off for a sell actually on this market, which is, it's a bit aggressive to get in now at 12.45. You could look at this. I mean, I will be looking at this as for an aggressive entry and also a more conservative entry. The aggressive entry is a trade that we would get in prior to the close, because often into the close you get more confirmation. You'll see whether it is a complete daily close below, for example, a previous day's low or the break of the pennant. But for a more aggressive entry, it is already triggering for a sell at the moment on gold here. Also, another market which I'll bring out to your attention, because we've just hit our profit target on this market, but it's worthwhile being aware of this. Sugar created a really nice bear flag formation just yesterday. This was a pretty quick trade. We were in and out of this within 24 hours here. So we just hit our profit target a couple of hours ago. And you can see here where we've just had essentially a breakdown. It's been very much the case for sugar here, where since this downward trending channel has been developing, it's created this staircase pattern, where essentially, or continuation pattern, where you continue to see these bear flag formations which develop, and then they break support, sells off, bear flag, break support, sells off, bear flag. And we just caught that nice quick move yesterday, come out and hit our profit target, in and out of sugar pretty quickly there. We might come into some short-term support now around the 1665 zone, because it is a previous level of resistance going back towards the end of March here, and also consolidation phase around May as well. So I suspect short term we're getting oversold at the moment on sugar, but that did represent a good quick sell short opportunity on this market. So just to put that on your radar, sugar can be quite good for these quicker trading opportunities. And then moving over also to another market which we can just put on your radar. Actually, I'll give you two more. One of those being cocoa. And cocoa, to me, actually, cocoa is looking quite interesting now. So cocoa has been one of the best performers. We'll just go back to that, I'll show you. This cocoa has been the second best performing market over the month of March, up over, well, just under 9%, 8.7%. Okay, cocoa. It staged a very big comeback after it broke down significantly here. Cocoa was the worst performing market in 2016. Cocoa was extremely oversold by the end of the year, and it's continued to break down at the beginning of 2017. But look at the monthly chart. Look at this big bullish engulfing candle, which has formed at the 2008 lows. That's previous resistance turned support. You've got a capitulation happening around that level, and we've been looking for a re-entry. And you can see here we've had a recent rally breakout, close above the 50-day moving average, which hasn't happened since August last year. We've now got above that level, nice little hammer developing just above the 50 MA, 21 MA. I'm seeing this coming from a bit of an oversold condition. Certainly we didn't want to chase the trade and get in overbought last week, but now I'm looking for the potential for a new setup to develop here, taking it back towards resistance. So cocoa is also worth having on your radar and having on the watch list right now if you like to trade the soft commodities. It's definitely one to have a look at, even longer term. Even if you're not a short-term trader, you're looking for a longer-term trade, especially if you take into account the overall oversold condition of this market. From a contrarian point of view, often the worst performing commodity one year can be the best performing commodity the following year, and you can see this at the moment. The snapback in price over March has been quite impressive so far. Of course, tomorrow will be the last day of the month, so we'll have the fully formed monthly candle. If that's a bullish engulfing candle on the monthly, or a railroad, which is what it looks like at the moment, which would be identical in terms of a railroad formation, there would be identical in terms of its closes, body, and that's almost what we've got at the moment. You've got almost identical low of the body, high of the body so far. If it closes like that on the monthly, you could look at this for a nice longer term position as well if you're looking to load up for a longer term trade. So just to put that on your radar as well. Okay, fantastic. So I think that's everything that we wanted to cover today, guys. Just a bit of forecasting of where we expect gold, silver, oil, US dollar, S&P 500, and also cocoa analysis for today. If you enjoyed today's analysis and you would like this on a more regular basis, if you want to join our live trading rooms, join the course of the week. You want access to all of our trades, entry, exit, take profit, trade management, the full life cycle of every single trade that we provide at the Gold and Silver Club to all of our members. If you'd like access to a mentor, if you'd like access to all of our trainings or online trading courses as well, very simply, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and of course we will get in touch with you ASAP. Very much look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Just www.jointhegoldandsilverclub.com. Very simply, again, by being a member of the Gold and Silver Club, you get access to our live trading rooms during the week. You get access to our notifications of every trade that we're taking, exact entry, exit, take profit, trade management via email and SMS. And you also get access to our Private Members Academy, our membership site with all of our training material, including our strategies, the quick start guide to commodities, risk management, trader psychology, and all of our commodity research, market insight, seasonality. It's a lot of information and resources for you there. So very simply, all you need to do is go to www.jointhegoldandsilverclub.com. Okay, fantastic. So thanks everyone. I hope you enjoyed today's session. Good to be here as always. We'll definitely catch you on the next one. I look forward to hear from those of you who will be making an application to join us at the Gold and Silver Club. Okay, guys, take care. Good trading, and we'll speak real soon. All the best. Bye-bye.